Emily here to discuss 4 different types of loans. Please note this is not financial advice and you should talk to a loan officer, which I'm not. However, I did talk to a loan officer to get the information for these slides. FHA is the first loan that you may have heard about. It's great for people with maybe not the best credit. It's a 3.5% down payment. The private mortgage insurance, which is required, the factor for that is a little over 0.5%, and you need to understand that PMI does not drop off when you build up enough equity with an FHA loan. The appraisal can require repairs, and this is why sellers might not like it. And to be fair to the sellers, why should they make changes just because the buyer's loan requires it? There are ways to structure your offer so that the seller doesn't feel like they're on the hook for these things. And it could be a moot point if the house is in really great condition. For example, a house that's $400,000, only 5 years old, it's not going to require repairs, so they shouldn't worry. The seller can pay up to 6% of your closing costs, another thing they might not like, but the buyer can offer that much more to cover the difference so the seller doesn't feel like they're out of pocket. FHA does often give you better rates. VA, of course, is for veterans. It has a 0% down payment and no PMI. In addition, the appraisal can invoke Tidewater. What this means is if it comes back low, the appraiser can allow the agent to supply comps that support the purchase price. However, it can still require repairs, same issues as FHA. There is a funding fee for VA. It can be waived if you have any type of disability. Hearing loss is a very easy disability to get, so it's worth exploring. If it's not waived, you can roll it into the loan. There is an origination fee that is not to exceed 1%. In Wisconsin, you can get a mortgage credit certificate, which adds $600 to your closing costs, but it can get you $1,000 to $2,000 a year. I don't understand much more about it, but this is why you talk to a lender. And by the way, don't find a VA lender online. Go to a local lender that does VA loans. You will get a much better deal. USDA is another great loan. It has a 0% down payment, and the PMI factor is less than FHA. With the USDA appraisal, if it comes back higher, you can use that built-in equity to cover your closing costs. For example, you're buying a house for $220, the appraisal comes back at $230, that difference can be used to cover your closing costs, or the seller can pay up to 6% of the closing costs with the same issues as with FHA. And also that appraisal can require repairs. USDA is only for rural areas, so check the map because it might not be a viable loan in the area you're looking in. For example, Sheboygan and Manitowoc I know are both way too big to qualify for USDA. Finally, we have conventional. This is a minimum of 3% down payment depending on situation. The PMI factor can vary wildly. It can be as low as 0.2% or almost 3 times what it is for FHA because it depends on your credit score. But PMI does drop off once you reach 20% equity. The appraisal does not require repairs unless there's something really what I call horrific. For example, an appraiser was walking around in a house and stepped on a loose floorboard which flipped up and actually hit them. That, of course, needed to be fixed, nail down the floorboard, but mostly repairs are not required. And conventional loans are often preferred by sellers because there's a perception that there are fewer strings, and actually this is true sometimes, quite a lot. So for more information, contact a loan officer. This is Emily Matthews with RE/MAX Universal. If you know someone that this information will help, please pass it on to them.
And that's it for now. This is Emily Matthews here to help you with all your real estate needs. Don't forget to subscribe. It's the little icon with my head on it. Have a wonderful day.